Hello there, YouTube. Welcome to Mom and Pop Know Best. Today, again, we will be talking about mortgage rates and their craziness. So, as you can see, what I was talking about before in terms of that rates will finally start to drop, it is happening. So, today, this the rates are at 3.625 for the 30 year, and for the 15 year is at a 3%. So I believe last time the 30 year was about four and a quarter, and the 15 year was at 3.5%. So the 15 year dropped half a percentage point, and a little bit more for the 30 year. The jumbo rates are still at the same rate of 3.625 and three and a quarter for the 15 year jumbo rate. Um, so what does this mean? So finally, interest rates are starting to reflect the long-term interest rates or the 10-year yield. Um, the markets are starting to sort of steady a little bit, if you will. And when I say that, it doesn't mean that things are over or things are getting better. It just means that markets are now reflecting information that is out there versus before, there was a little bit of lag, if you will. On top of that, the Senate is negotiating a stimulus package that may help some companies, may help some small business, and will be sending checks to Americans. So I think right now what they're thinking about is $1,200 per person and $500 for children. I will post another video on the kind of the stimulus package and how to compute how much you will be getting. So don't forget to subscribe. So once that is posted, you can see it and compute how much you will be getting for you and your family. Again, it hasn't been passed yet, but it seems that section or that portion of the bill seems to be okay, although they're still negotiating whether it should go up from 1,200 to 1,500 or not. Um, Again, doubtful, but we'll see. If it does move, it's going to be a very small change. The biggest hurdle now is whether they want to give money to large companies or large corps or not. So that's kind of the idea and what's holding things up. But hopefully that gets resolved and they do pass something soon because the American economy does need some sort of stimulus package. Again, I from my personal view, actually, you know what? I'm gonna post another video about it. So you go ahead and subscribe and hit that little bell so you can get some sort of a notification once we post something. So let me compare the Quicken Loans rates. Quicken Loans are at 3.75 for the 30 year and 2.875 for the 15 year. But again, remember to always look at the APR um, and see how that's changing and to try and compare both. So is now a good time to refinance? Well, we don't know. Is this the lowest it could possibly get? We don't know. It possibly could, but I honestly, from again a personal feeling, um, based on um, based on how things keep on evolving, it doesn't seem like this is the lowest it will go. I think interest rates will continue to kind of drop. But what I would suggest or what I would advise you is to get in touch with a banker, get in touch with a refinance company. Um, do your shopping now on which one is offering the lowest rate and start the process. Start sending them your paperwork and start sending things so they are ready, but don't lock in rates yet. And they will also advise on kind of what their thoughts are and what they are seeing. But I would advise to just float your rate, which means do not lock in an interest rate yet. Just kind of have your paperwork ready and have everything prepared. So as soon as you do see rates dropping and you feel like this is probably the floor, you go ahead and lock in. And I would continue to post as I'm following these mortgage rates, and I will continue to post what my thoughts are and what the rates are today. Again, remember, you may not get these exact rates that I am showing here. These are kind of what Wells Fargo and Quicken Loans are showing, but it the actual rate you get will depend on your credit worthiness. So I would suggest you start your process now to try and get an idea of where you are. If there's an uptick in premium for your specific case, how much that is, but things will tend to move in the same direction. Let's say instead of a 3.625, you can get offered a 3.9%, something of that sort. But if this drops, it should so your particular rate should also drop in the same way. So keep that in mind. Again, it will depend on the property that is securing the loan, how much it appraises for. It will depend on your credit worthiness. It'll depend on many factors, but you should expect things to move directionally in the same way. Um, but if somebody comes in and lies to you and tells you this is the best rate and that's it, you're done, like you take it now or forever hold your peace, I would say, well, you take that with a grain of salt, and you take whatever I'm saying with a grain of salt. Again, rates are absolutely crazy now. They could drop, they could go up, who knows? But what I would expect from, again, from intuition and from economic theory is that things should potentially start to calm down in terms of rates. And what I mentioned before is that these rates should start to get closer to each other, which they are. And I would think that the conforming rates will start to drop a little bit. This could also translate into homes getting more expensive. So the value of property is getting more expensive. Again, that's simple econ here, where interest rates or the demand for money or the cost of money really will go down. The cost of money will go down. Therefore, the demand for money will go up. So more investment, more loans. So now you can afford more home, if you will. So therefore, homes will get more expensive. But the other variable that we need to be thinking about is the economy itself. So the economy may not be doing so well. Not a whole lot of people will have a lot of income or a lot of money to kind of to go and move to kind of other homes, and nobody honestly will be wanting to put their house for sale now and having a bunch of people come in and tour their home, especially if they are living in it, until this illness is resolved and it's gone. So that could also contribute to the demand for homes being low, driving prices lower. So you really have a bunch of factors here. In theory, you think that home values will go up, but this slowdown in economy may drive prices down a little bit. So you may have interest rates down and prices down, which is, again, if you are a prospective buyer, this may not be a bad time to start thinking about buying, as well as refinancing. So with that said, again, we will be posting something related to the stimulus package and what it actually means and how to compute how much you should be expecting. Hopefully, once it's passed, how much in terms of free money will the government be sending you? So again, do not forget to hit that like button, subscribe, comment below, and let me know what your thoughts are. Thank you so much, and stay safe.